Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, Biden's budget is bringing trillions in new taxes. I think the response to a lot of numbers out this week, I'll make very quick, but very important to bring it to your attention. We're going to talk about the doubling of the capital gain tax rate being proposed and a double death tax that's being proposed on top of just higher taxes. In fact, an onslaught of $4 million of additional taxes that will add to the deficit over $16 trillion. Well, let's get right to it. So I like how this was said. This was in the Wall Street Journal, I believe. The price tag of President Biden's proposed budget is yet another glaring reminder of this administration's insatiable appetite for reckless spending and the Democrats' disregard for fiscal responsibility. This came from a House Republican leaders said in a statement, calling the plan a roadmap to accelerate America's decline. And decline it is, folks. I want you to think about it. The projected wholesale, on a wholesale level of inflation, right? The producer price index number that came out this week was projected to be up about 0.3%. It came in at 0.6%, double what was projected. And one of the things I talk about on Hidden Wealth Radio this weekend, which, by the way, all of our radio programs can be found as a podcast at hiddenwealthradio.com or at iheartradio.com and search Hidden Wealth Podcast. Well, I want you to think about your thinking. These proposals, because I've talked to many of you from around the country, selling a business, looking to liquidate as you get into retirement, not to hassle with tenants and toilets, as we say, in the rental property industry, and you've had really good, strong appreciation. And, of course, the time to act is when things are high, not waiting around for things to go low, like a lot of people waited too long back in 2008 and going into 2008 and 9. But many of you have decided that the taxes trump all. Folks, don't let the taxes throw you, because you can control the taxes if you know what to do. Go to retirementprotected.com. That's retirementprotected.com, because all these taxes, whether we're talking about indirect taxes through inflation or higher coming taxation, as well as higher coming inheritance taxation, I want to teach you what you can do to protect yourself. These are the key things that many of you from all around this country have said. Look, we've got kind of what you talk about, Chuck, and I reference this as the big box store brokerage's approach. It's not a plan, it's an approach. But the approach can only go so far when people start to transition from this accumulation phase to this distribution phase. And many of you have reached out and said, you know what, we want a plan. We want a holistic, comprehensive plan that addresses taxation, inflation, legacy. And this is where this is going to be really, really important, folks, is here's a couple things I want to throw at you. The proposal in this new budget, which, again, is what the proposed Biden budget is not a roadmap. It's the proposed Biden budget is a bullseye on those of us that have worked hard and we've saved hard. And to give you a couple of these examples, unrealized gain. So in other words, if you transfer, right, if upon your death you had a large real estate portfolio, stock portfolio, and it had you had unrealized gains, let's say in a stock, and over a certain level, right, that's all going to be taxed at your death on top of the estate tax, death tax, they call it, the traditional death tax. Now they're just adding a second death tax. Well, folks, think about it. If the capital gain tax rate, which is being proposed to jump as high as 44.6%, is the very thing that through unrealized gains could take advantage of your heirs later. Many of you reached out and said, you know what, I want to get an overview of asset optimization and asset protection, estate protection, so you can see, right, don't build a castle if you're not going to build the moat, what tax risk road you're on. I've talked a lot about that with the tax calculators that we've created and showing people the tax risk that they're exposed to. But then teaching them the tax risk that their heirs are exposed to takes us to a whole nother level. Let me give you a good example. I think of a couple we met with just this week, and we used one strategy. And I'm going to just give this to you quickly because I'm going to talk about various strategies this coming Tuesday at retirementprotected.com. Again, it's a complimentary webinar, folks, to remove your income and your assets from the tax system. Get rid of this exposure of Washington's war on our wealth. 44.6% capital gain tax. 39.6 top federal tax rate. The tax sale is on, and we got about 21 months to take advantage of it. And it takes sometimes several months to get these strategies in place, especially if you're positioning to sell real estate or you're positioning to sell your business, with several of you we're working with in that capacity. And here's a strategy that our tax team has been all over with tax opinion support and been around in for decades. Is we work with this gentleman where he had about $600,000 left in his IRAs that he wanted to get converted to Roth IRAs so he doesn't have these required minimum distributions. And remember, April Fool's Day is a big Fool's Day for our federal government, because for the IRS, because it's fooled a lot of people to postpone taking their first RMD. So if you have your first RMD due this year, don't wait to give that one-time reprieve where they let you put it into next year by April 1st. So those of you that skipped your first technical RMD last year, it's actually due here in a few weeks. The problem is you're going to owe two in the same year. And that pushes you into higher taxes. That's another government gotcha to say, well, we'll give you the first year, we'll let you push it in the next year, but then they get you for 2. Well, I want you to think about what this gentleman did. He's about 5 years away from RMDs. He's very concerned because he sees these inherited IRAs he's already taken in from his late father, which is already forcing he and his wife, while they were in their highest wage earning years, to pay more taxes. He doesn't want to then have his own RMDs on top of the inherited RMDs to then just push him up, right, higher and higher and higher. So he used one strategy. He used $100,000 with a strategy we teach clients that provides a 10 times deduction. So 10 times 100,000 is $1 million. And presently, the deduction for this strategy in the tax code is 60%. So that's a first year $600,000 tax deduction. So he was able to use the deduction per our tax team and our retirement planning team to go over to his IRAs and convert his $600,000 of IRAs to Roth IRAs, and it cost him 0 tax. And the beauty of the remainder of that 10 times deduction being another $400,000, he's able to carry forward over the next 4 years, 5 years, up to 5 years. And now we're helping them liquidate their real estate portfolio to get a better overall net return, more a tax-efficient return, a higher return, and not have to pay tax on the liquidation of the real estate. That's just one hidden wealth strategy where we'll teach you how to better discover and uncover your hidden wealth. But first attend retirementprotected.com, folks. It's a complimentary log on and learn educational webinar where we'll talk about different strategies and tax savings techniques that are all above board in the tax code, and also protecting you from the downside, but also the unfortunate taxing of the upside. This insatiable, right, as it was said, a glaring administration's appetite for an insatiable appetite for reckless spending, right? The Biden budget is bringing trillions of new taxes, and you can get yourself unexposed. You worked hard for your money. Imagine more financial success, less stress, less worry, less concern of Uncle Joe, and all this just tax target that just, again, I want you to understand, the deficit is going to spiral. This person just a few weeks ago telling us how well the economy is going is not what we feel at home. We know the facts. The facts are everyone's having to spend about $1,000, needs about another $1,000 more a month just to maintain the same standard of living they had just over these last couple years. And with this proposal of $7.3 trillion to this budget, is only going to add, unfortunately, to the unfortunateness of being exposed to unnecessary inflation, taxation, and the cause of taxing the rich, the wealthy, or these big billion-dollar companies is only going to have trickle-down economics, as Reagan used to say, of impacting you and I, and where it hurts even more in retirement, of wanting these companies to do well without having to not have as sizable profit margins to produce better returns, because we need those returns to get through retirement. So unfortunately, folks, these Biden tax cuts, the trillions of added Biden budget taxes are going to cost us all, regardless of whether you make over $400,000 or not. Retirementprotected.com, retirementprotected.com.